All right, welcome to the new daily recap. Let's go about today and see what happened. Again, we are still in the ranges, but price moved some way. It had some movements finally. And what? Let's get this out of the way real quick. 1 second. Let's clean it up later. All right. So, what can we see? Uh, Overall price ranging the whole week, and today finally we got some movement. We took previous daily highs. Price melted down to previous daily lows, and let's see where we end for today. A bit early with the daily recap, but I have other stuff to do later on, so can't spend too much time on this. So can we see? We had this previous daily high, we had this previous daily high. Had all the confluences. Oh yeah, I remember. And then price just took out this previous daily high as well as our previous daily high over here, and then turned down into previous daily lows. What can we see? When price took these highs, left these wick, very indecisive candles. Let me do one thing real quick. And let's take this down another step. There you go. Oh, one thing. This one I want to see. So yeah, what we can see, price took out this high, previous daily high, New York high, something else. Two New York highs, building up liquidity to the downside, and then after taking Asia highs, so it went higher and then came down. What can we see in the candles? After it took these highs, left a huge wick, indecisive candle, and then impulsive bearish candle down. And now we're in this candle, this is the last candle during New York. And we got some lows here to the downside to target. So can be interesting. Let's see. For now, momentum is down, but as you can see, we took previous daily lows. And now we go back to the upside. Going down lower, when we range, we can like play liquidity and not so much the structure, but focus on liquidity. So we had this low, and this low led to price breaking this high. So let's draw it out. This high is, oh, that's ugly. This high is taken, and the cost of that high being taken was this low. So if you have to draw that out somewhere else, we have a high, a low, some bullshit in between, some internal highs, internal lows, and then building more liquidity, coming down. And then we have this high that takes out, oh, you can't see my finger, that this high. So there you go. So this is the low that led to the break of this high. It's not like a break of structure because we're still in this bearish range. Then what caused this high to break this high? It's this low. So what is our target in the range? This low. And what can we see? Price triggled down, did some bullshit again. Then we had Asia highs, Asia high is being taken, and then price came down, trickled down, then took London highs because that's the high. London high was the high that led to breaking Asia low, and then liquidity. So liquidity to the upside taken, liquidity to the downside taken, liquidity to the upside taken. Now liquidity to the downside taken. Then if we have this high as Asia high, so that's a strong liquidity high. This is our Asia low, and this is our London high, and this was our New York low. This is our new New York low. This is our new New York high. What caused price to break out the high, the low that led to this break? That's this one. So we end up this move. So how to explain that? What caused us what caused to break this high that was this low? Then we'll clear liquidity to the one side taken, and then we can look like, okay, so this is our new target. Then what caused us to break this low? That was this high. And what can we see now? Price took that high. Then created Asia highs. Asia highs being taken. London highs being formed. I think. Let me check that real quick. Oh no, so this was during London. So London highs coming in, taking out this high as well. That's just extra bonus. Oh, hold up. And then that high was taken. And then what can we target? So this was the low that led to breaking these highs. So that's a new target. And as well as Asia low. And what can we see? We broke to the downside again. So yeah, it's messy, but if you play with it, just freestyle it a little bit, understand it. I don't know if this is completely correct. I'll have to ask Marco, but I'll just this is how I go about it. And that's basically what happened here. So if you copy this over here, you see low, high, high, bullshit in between, building up more liquidity to the upside taken, and then price comes down, building up more liquidity to downside, taking some internal range liquidity to the upside, then taking the downside liquidity. What caused us to break to the downside liquidity was this New York high. So then price takes New York high. Then in addition, we took this high. That was the overall high that led to breaking this low. And we had Asia low that caused breaking us this high and this high. So that's these two were our new targets. And we broke down below there right now. So yeah. Then let's go down lower and look at our entries. So after we took Asia highs, Asia formed the first form of early sellers. Then instantly after Asia, before my trading time, we had our first sell up set up. If you just quickly take that off, what can we see? There you go. With the breathing room, or you take 50%, but I have a 0.3, 0.4 breathing room on the downside and 0.5 on the upside. So that's 1 pip on both sides in total. Around 1 pip, 0.8 to 1 pip in total. Just hits 1 to 5, then continues with this bullish range. So that's the first trade. All right, then second trade, I took it as paper trade. Why did I take it as paper trade? Bro, I'm done for the year. I finished the year with a winning trade where I fought my psychology. I won the psychology battle. I did something with partials, which I finally managed to do. So I was completely happy with it as a final trade of the year. But if we can, what we can see over here, we had early sellers again. Price is now building up liquidity to the downside. Stops below these lows. Higher time frame liquidity taken, form of Asia highs and this New York high over here. Then what can we see? Price building up, bearish break structure, impulse down, entry, short 634 or 42.40 just before Frankfurt open. Nice short. Then price coming down, hitting 1 to 5, 80% taken. And I was targeting 1 to 10 for my final target. However, I think it just came short, like 5 pips or something. Yeah, around 5 pips. Then what can we see? Order flow trade. Why is the breathing room not 0.3, 0.4 over here? Because we had this liquidity over here. So I have the entry at the liquidity and can even put it above, but just keep it at the liquidity. 0.5 to the upside. At the same time, the SL, the stop loss of this trade, is moved over here into profit just below these highs, just below the hose. And then break to the downside. However, this is like impulse up, impulse down, impulse. So I was like, okay, after we had this impulse down, let's just move stop loss to break even. We're just in profit also because there was no unmitigated order block left. So I was like, okay, we can move it to break even. Did that. Price just hit 1 to 5 for order flow trade. Why order flow trade? Because we had all confidences over here. So and in my trading plan, if we get all the confidences for the first trade, you're gonna take the second trade in case you miss the first trade, or if you want to order flow trade, you can take the second trade from the extreme order flow, and that's what I did. However, you can see we had low, high, high, low, high, high. Then we had the break structure. So actually price could have also came into the deepest discount over here and then continue short, but like this was enough liquidity because we had this one and this one just above the block. So it made sense for me to sell here. Risky trade could have also come up, as I said, but that's part of the risk, you know. Oh, let's take that off. For the first trade, we went break even at the 50% of the bullish range. That's because we were bullish, so price could have also continued up. As you can see, we respect the bullish order flow as well over here, so a bit tricky, but that's only for the uninformed trader. The informed trader knows we got this trend line liquidity and impulse to the downside, correction on the way up, so continuation down. Then that was London. Then we had another bearish break. Price comes up. Maybe these are your early sellers, a bit far away. If anything, these are your early sellers reacting from this block. Price reacts from the extreme block, bearish break structure. You can maybe enter directly from here. However, this is like a large leg. I don't like to trade large legs. So what do I do with large legs? I open them. Okay, I have to really stop saying bullshit. Oh, it's already mitigated. That's unfortunate. But then you can take this block. You can see the black block over here. Candle, order block, whatever you want to call it. These are maybe early sellers. If anything, these are early sellers. First time price comes into discount, then you get in my case, this would have been a break-even trade. Why? Break structure, cut. Well, this is not really strong early seller. So, but if you would take this trade, if you get your last order block, actually over here, you could maybe take the 2 minute. 2 minutes clean. Uh, oh, and 1 to 5 is hit around there. From the 2 minute block, a bit large, 7 pips, but that's all right. But for me, what would have happened is miss trade and then early sellers taken out. For me, there would have been no trade because I had no early sellers, and the breeding room is from 500 It's even 5-2. Probably missed me. Yeah, probably missed me. Part of the game. To be fair, the extreme block is not that clean, so could have maybe taken this block as like a looks more like a better order block. Anyway, then coming into New York, what can we see? We continue with the bearish downtrend. 50-minute maybe. Just gets missed, but we tap into the fair value gap on the 50-minute. And no form of early sellers, no entry drill for me here. And then coming here, you see high that led to a new low, bearish bullish break. From fake outs, messy price action here. After the previous daily lows. Not really early buyers because this is not a high that led to a new low. Early buyers would have looked like this. I think I made a banana bread. I think it's done. Early buyers would have looked like that. These are my early buyers because we broke a low or high that led to a new low. High that led to a new low, high that led to a new low, low that led to a new high. Taking out equals, but continuation to the downside. Won't respect this probably. Oh, tricky. Usually when price action is sorry. The price action is this clean during New York or during London. New York doesn't have that many opportunities. And I don't see anything come above these internal range liquidity. Move to the downside, impulsive candle entry here, but that's not my entry style. So yeah. Daily recap. 2 trades that fitted the plan. Are there any losing trades that fitted the plan? Wait. Let's look at the candle formations at our entries or at my entries. Impulse up, and as soon as we take these New York highs, price starts to slow down. Can we see? Not strong bullish candle, again leaving wicks to the upside, then more of a ranging candle here, but taking out these lows. So yeah, makes sense to sell there in terms of you can see the slowdown. 1, 2, 3 candles slowing down here suddenly after taking these highs, then spike to the upside, taking this high, leaving a huge spike in, and then closing bearish, indicating that price gonna turn around. So yeah, this was the daily recap. I hope the liquidity part made sense. I hope the liquidity part is good. I'm gonna send the link to Marco and ask him to watch the first few minutes in the get his feedback. All right, thank you guys.